Picture this. You wake up, grab your phone, and check your crypto portfolio. Your heart sinks. Everything's bleeding red. Bitcoin just crashed through a critical support level. Your altcoins down double digits. And the worst part? Nobody saw this coming. Welcome to January 2026, where the crypto market just took a brutal hit that's got everyone asking the same question. Is this the beginning of the end, or the opportunity of a lifetime? Let me hit you with the numbers first, because they're absolutely jaw-dropping. The total crypto market cap just hemorrhaged 2.4% in the last 24 hours alone. We're talking about billions of dollars evaporating into thin air. The market's now sitting at $3.1 trillion, and here's the kicker. Out of the top 100 cryptocurrencies, 92 of them are drowning in red. That's not a correction, folks. That's a massacre. But here's where it gets really interesting. Bitcoin, the king of crypto, the asset that's supposed to be digital gold, just did something that has the entire trading community on edge. It broke below $94,000. Now, if you've been following crypto for any length of time, you know that support levels aren't just random numbers on a chart. They're psychological barriers, zones where buyers are supposed to step in and defend the price. When those levels break, it's like watching a dam collapse. And right now, analysts are warning that if buyers don't show up fast, we could be looking at a drop all the way down to $88,000. Think about that for a second. $88,000. Just a few weeks ago, we were celebrating Bitcoin's strength, talking about $100,000 targets, institutional adoption, ETFs changing the game. Now we're staring down the barrel of a potential 12% drop from current levels. The bulls managed to push BTC back above 93,000, but it's fragile. It's like watching someone try to hold up a house of cards in a windstorm. Now you might be wondering what the hell happened. Markets don't just collapse for no reason. And you're right. There's always a story behind the numbers, and this one's got more twists than a Hollywood thriller. The Fear and Greed Index just told us everything we need to know about market sentiment. Yesterday, it was sitting at 45, which is neutral territory. Not great, not terrible. Today, it plummeted to 32. We've officially entered the fear zone. When that index drops that fast, it means panic is setting in. Traders are selling first and asking questions later. And the fuel for this fear? It's coming from two massive sources that have nothing to do with crypto fundamentals. First, we've got macroeconomic tensions that are making everyone nervous. The Trump administration just dropped some news about tariffs that sent shockwaves through global markets. When traditional markets get spooked, crypto gets absolutely hammered because it's still seen as a risk-on asset. Investors pull their money out of volatile assets and run for safety. Bonds, cash, anything that won't move 5% in an afternoon. Second, and this one's wild, there's serious geopolitical drama brewing around Greenland. Yeah, you heard that right. Greenland. The kind of headline that sounds like it came from a spy novel is actually moving crypto markets. When uncertainty hits the geopolitical stage, it ripples through every asset class, and crypto's no exception. But wait, because the institutional side of this story is where things get really dark. You know those Bitcoin ETFs that everyone said were going to change the game? The ones that were supposed to bring Wall Street money flooding into crypto? Well, on January 20th, they just recorded outflows of $483.38 million. Let me break that down for you. Grayscale, one of the biggest players in the space, saw $160.84 million walk out the door. Fidelity, a name synonymous with traditional finance credibility, lost $151.13 million. And here's the real gut punch. Even BlackRock, the world's largest asset manager, the company that was supposed to legitimize Bitcoin forever, had $56.87 million in outflows. When the smart money starts heading for the exits, retail investors pay attention. And right now, they're terrified. So with all this doom and gloom, with markets tanking and fear spreading like wildfire, is there any good news? Actually, yeah. And it might surprise you. While everyone's panicking about price action, some companies are doubling down on Bitcoin in a major way. Steak and Shake, the restaurant chain you probably ate at as a kid, just announced they're putting $10 million of Bitcoin on their treasury balance sheet. This isn't some crypto-native company or tech startup. This is a traditional American business deciding that Bitcoin is a better store of value than cash. That's a signal. A corporate treasury allocation sends a message to other companies that it's not just okay to hold Bitcoin, it's actually a smart financial move. Then there's Newrez, a major mortgage lender, and they just made a decision that would have been unthinkable a few years ago. They're now accepting Bitcoin, Ethereum, and stablecoins as qualifying assets. Think about what that means. One of the most traditional conservative industries in America, an industry built on stability and long-term thinking, just gave crypto their stamp of approval. You can now use your digital assets to qualify for a mortgage. That's not speculation. That's integration into the real economy. So we've got this perfect storm of contradiction. On one hand, prices are crashing, fear is spreading, and institutional money is flowing out. On the other hand, adoption is accelerating, major companies are buying in, and the infrastructure is getting stronger every day. Which story should you believe? Here's where expert predictions get fascinating. Analysts are putting Bitcoin price targets for 2026 in a range that's absolutely wild. On the low end, some are calling for $75,000. That would represent another significant drop from current levels. On the high end, $225,000. That's literally triple where we are right now. The consensus seems to be that we're in for extreme volatility. Massive swings in both directions. Days where you'll make a year's salary, and days where you'll lose it all back. This isn't your grandfather's stock market. This is crypto, and it's going to test your conviction like never before. The thing about moments like this is they separate the tourists from the residents. When everything's going up, everyone's a genius. Everyone's posting screenshots of their gains, talking about Lambos and moon missions. But when the market dumps 20% in a week, when your portfolio's underwater and your group chat goes silent, that's when you find out who actually believes in this technology and who was just along for the ride. The fundamentals haven't changed. Bitcoin's supply is still capped at 21 million. The halving still happened. Institutional infrastructure is still being built. Countries are still exploring Bitcoin as a strategic reserve asset. The technology is still solving real problems. None of that changed because the price went down. What changed is sentiment, and sentiment is the most irrational force in markets. Right now, the market's pricing in fear. It's pricing in uncertainty about global economics, about policy, about whether this whole crypto experiment is going to work. But here's the thing about markets. They're forward-looking, but they're also terrible at predicting the future. Every major bull run in Bitcoin's history was preceded by a period where everyone thought it was dead. Every time smart money accumulated was during moments exactly like this one, when retail investors were panic selling and swearing off crypto forever. So where does that leave us? The market's down, confidence is shaken, and nobody knows what tomorrow brings. But the companies that matter are still buying. The infrastructure that matters is still being built. And the believers? They're still here, watching these price levels and deciding whether this is their moment to act. The next few weeks are going to be critical. If Bitcoin holds above 90,000, if buyers step in and defend these levels, we could see a rapid recovery that catches everyone off guard. If it breaks lower, if we see that slide to 88,000 or below, buckle up, because it's going to get rough before it gets better. But either way, this market's going to move, and when it does, it's going to move fast. This is crypto. This is what you signed up for. The volatility, the uncertainty, the moments where everything hangs in the balance. The question isn't whether the market's going to survive this. It will. The question is whether you will. Whether you've got the stomach to hold through the fear, or whether you're going to be another statistic, another person who sold at the bottom and bought back at the top. The opportunity of a lifetime comes dressed as a crisis. Always has. Always will. The only question that matters is whether you'll recognize it when it arrives.